Kalpen, hi Vaibhav.
Thanks. Hi.
Hi, thanks for joining us, and we'll straight away get into the session. Can you just brief us about, because a lot of people have mentioned Gift City, so how it works and how investors sitting here can take advantage of it, and why they should look at Gift City for international investing.
So actually, like the name says, Gift City is a gift for a lot of Indian investors who want to increase their investments outside. Till now, the only option available was to invest in mutual fund schemes in India, which have some percentage invested in global asset classes and stocks, or dedicated 100% global. So that's one route in which retail investors can invest globally. The other option, over the last, I think, 10 years, the government has created a platform called GIFT. It's basically Gandhinagar International Financial Services Center, and the whole idea of that platform is to, make India or a jurisdiction of India a platform where over time it becomes an international hub for money management. And initially it started off with the primary objective of getting global capital into India. So today a lot of FIIs are investing in Indian stocks anyways directly, but a lot of global funds invest in India through a Luxembourg vehicle or through jurisdictions in Asia. The idea is to create a similar jurisdiction in GIFT and get operating teams and companies and branches set up with full-fledged operations of money management, so that today a lot of guys who invest in India do it from Singapore or Hong Kong. The idea is, why can't they reside in Gift City, which is in a way an offshore, so-called offshore center, and create talent pool and an ecosystem. So that was the first original thought about Gift City, and I think they've progressed extensively. We launched a Gift City fund for few global investors, and today we manage around $1 billion. I think the largest in the listed market, where it is inbound money, which we are investing in Indian markets. Around the same time, RBI has this Liberalized Remittances Scheme, which enables every individual to invest up to $2.5 lakh, which is roughly 2 crore per annum under LRS outside globally. And as of today, or till now, you and I would have had to invest globally through an interactive broker's website or through some global brokers and buy a fund managed by global asset managers. What we have done at DSP is we have launched the first retail fund on Gift City platform, through which our fund managers based out of India in Mumbai will advise our Gift City fund, and this fund will invest money outside. So it is international investing done for Indians by Indian asset management company. And that is the whole backdrop of Gift City.
Okay, great. Vaibhav, you'd like to add anything to that?
I know Kalpen rightly pointed out, the idea of Gift City is to be able to attract pools of capital, whether they come into India or divert pools of capital to global markets. And the jurisdiction wants to compete with jurisdictions like Dubai, Singapore, Mauritius, etc. So from a regulatory point of view, it's very friendly for investors, very friendly for asset managers to do business. And I must tell you, whenever I travel globally, maybe a couple of years back, people didn't know a lot about Gift City. But nowadays, I think most global investors also understand Gift City, and acceptability has gone up immensely. For retail investors here, biggest thing is mutual fund route of investing into global markets has been stopped. And we had firms like Vested and IND Money in the earlier section telling you how you can buy US stocks. But everyone might not have the skill to be able to know which stock to buy and when to buy. And that's where you needed help of a professional fund manager to be able to do it. Now through the Gift City route, you are able to get professionally managed funds from fund houses like DSP, Mirae, etc., to be managing your money on your behalf into various markets, whether it's US market, Chinese market, Japanese markets, or any other market in the world. So it gives investors a lot of investment opportunities, which at the moment they don't have access to.
And what's the minimum ticket size? What's the minimum investment they can make?
The outbound fund we have launched, we've done it in the retail version. So it's $5,000 for the first investment, and after that, incrementally $500.
Okay, and you guys also planning retail?
Yeah, so just we had already launched an outbound fund about a couple of months back. We had launched it as a Cat 3 AIF. And there the regulations in GIFT City is ticket size has to be greater than $150,000. So we've got a lot of HNI money already in that product. And investors can use the LRS route to invest. Also, there's a very interesting concept called as accredited investors, which means investors who fulfill a certain income criteria or a certain net worth criteria, in which case we had kept ticket size only as $10,000. We hope to also launch a retail fund soon, but the idea of doing maybe a Cat 3 AIF fund before a retail scheme was to understand the entire flow of transactions, LRS, banking, everything before we got retail money into the system. Because retail applications do have its own challenges, while some of the larger ticket sizes are easy to manage. So I'm sure all of us will be launching retail funds soon through the GIFT City route as well.
Got it. I'll just take a small break to see if there are any questions from the audience. We can just see if there are any hands. Yeah, there is one. And yeah, you can maybe stand up so you can one thing.
Hello, Kalpen, this is a question for you. And been an investor with your fund for a long time, and thank you for everything. Just wanted to ask you about the dividend which you will get in your fund. I believe it's going to be taxed at about 40%, if I'm not wrong, around that number.
Yes.
So, and also when you churn the portfolio. So how do you perceive in your fund, how will you go about it? Just if you can give a...
So it's a very good question, and investors should always come in any product with eyes and ears open about all dimensions and not just the glamour of global investing, because last 1 or 2 years global stocks have done well. People are getting very glamorized notions about it. So the fund's taxation is as follows. All taxes are paid by the fund, unlike in India where taxes are paid by the investor after they receive all the gains. In the GIFT City retail fund, we will settle all the taxes, and then whatever we pay to you in your hands will be tax free. But what are the taxes we will pay? We build a stock portfolio. We earn dividend income. On that, we have to pay full marginal tax of 42%. So to that extent, it is a higher tax slab than what you would have got in a mutual fund. So we have a simple 70-30 mutual fund where 70 rupees is Indian stocks, 30 rupees global stocks. It's the most simplest way of participating globally. But people like slightly complex ideas, newer ideas. What is old is very boring. No one wants to ask about those funds today, unfortunately. But because it is new, because it is popular, so there are always pros and cons. So this is one of the limiting point. But on a 100 rupee asset, dividend yields are around 2 to 3%, let's say, or 3% globally. On that 3%, whenever we get income, there will be higher tax. The other tax, which is if we under the fund sell a stock before 2 years, that also has short-term gains at marginal tax rate. But for that, we know how to solve it. We would generally keep 4 or 5% in cash in the fund to settle for any outflows. So let's say the fund collects money through 1 lakh investors, and on a certain day, 500 want to get out and redeem. So we have 2-3 objectives through which we are trying to minimize that. One, the fund has an exit load of 2 years. We upfront discourage investors to invest anyways in equity fund for less than 5-7 years. If you don't have 7 years time horizon, forget this fund. Any equity fund is not right for you. So, and then we have an exit load till 2 years. So most people will obviously not get out before 2 years. If you get out before 2 years, the exit load component will go back to the scheme. So whatever exit load we collect from outgoing investors will go back to the existing investors. Third, the cash component of the fund, marginally whatever we keep, or the inflows will be used to fund for redemptions. And the design of the fund management approach, the belief of the fund management approach is to own companies for very long periods of time, unless we go wrong in some decisions or valuations go out of range. So generally in India also our holding periods are roughly 4 to 5 years. We rarely get out of companies faster. The same template will apply here. If you like a company and the company is executing, delivering, valuations remain reasonable, you don't want to get out. So we are not worried about the 2-year window. We have enough mechanisms, our holding periods, the 2-year exit load, some amount of cash to take care of outflows. All of that will solve for the second part of your question.
Yeah. Hello?
Yeah.
Yeah, hello, Niranjan here. So 2 questions. First, this is a new structure where MFs are allowed to invest abroad. Will the disclosures be the same? Like, will we get fact sheets for funds from GIFT City? And number 2, will HUFs be allowed to invest through LRS to this fund structure?
I think HUFs are not allowed. I'm not very sure about it, but I think HUFs are not allowed. You would know better. They're allowed? Okay, he's saying HUFs are allowed. So if you want, you can invest in our fund as an HUF. But the second question is on disclosures. It will be at par. I think the Indian asset management ecosystem is the most efficient, transparent ecosystem. We want to copy-paste almost as much of that, which is possible as per regulation, to give you the same. So to give an example, we did a small soft launch of the fund 2 weeks back, and the fund reopened on Monday. And I haven't yet seen the portfolio that has been constructed. But today, Vested was doing a demo. Vested has our fund, which is listed on their app. And they were actually clicking on the portfolio. And all the stocks which I broadly knew are going to be in the portfolio were there with percentage exposure. So the portfolio is built a few days back, and it's actually disclosed. So disclosure will be in line with Indian standards.
Yeah, the main thing is, most asset managers are managing the product, and the audience has been used to getting fact sheets, disclosures on which funds, which countries to invest. The idea is because you're investing into global markets, I'm sure all of us would want to share as much information as possible with you because you understand Indian markets well, but to understand global markets, slightly complicated, slightly complex. So from our side, it's going to be very important that we keep sharing knowledge on why US markets, why China, why certain themes to invest, so that you can make more informed decisions.
Hi, this side. Satvik here. I wanted to quickly ask about 2 things. One is with respect to the alternative investment side. In that private markets, DSP has not entered the private market space as such. Is that something which you've done consciously? Would like to know a bit on that. Second, with respect to talent, specifically in global markets. A lot of people, I've heard this spoken by a lot of fund managers, when they come down, when they speak to people in India, they said Brazil is a great opportunity. But when the Brazilian ambassadors or Brazilian investors came down to India, when they had a conversation with people, with fund managers, they're like, we are not really bullish on Brazilian markets ourselves. So they say that it's really important for regional establishments for the person to invest in that location. Do you believe in that? So private markets, and second one is regional establishment for global markets.
So see, we are very focused on simple listed equities and bonds within that India Global. And we want to remain focused on that. So we don't have plans to be in the private market as of now. Our core competence is listed market, and we are learning every day, and there's a long way to go to learn more and more and become better in that space. So that's our area of focus. I think the second question I didn't understand because it was very long. So if you
quick question is, do you think that your existence or your presence in the country you are investing in is important, or does it make a difference?
Okay, so there are times you have read in many newspaper headlines that 60-70% funds don't have alpha in their own country. So people in their own country, even in fact in global markets, 80% people don't have alpha. So maybe we think by being away from them, we might be able to do a better job. But and that was on a lighter note. But I think whether we'll make money or not will be purely a function of our skill and how we analyze businesses. And in the last 5-10 years, there is significant transparency in terms of how transparency and standardization of accounting standards, which enables you to learn businesses, their operating metrics, their cycles. So it doesn't matter really where you operate from, because businessmen sitting in India are, selling products everywhere in the world. Why should asset management be a localized industry? And I think in the last few years, many fund managers in India have demonstrated global investing track record. We have done global investing through our value fund for the last 5 years now. And our global slice of 26% exposure has generated 4% above MSCI World Index. So I think, and there are many, Rajiv is sitting here, they have been role models in doing this for the last 10 years now. So I think it is not an important parameter to be there in that country.
Maybe just to add to Kalpen, I know if you have global funds or global expertise, and it's good to leverage on that. Maybe from our side, I can tell you, Mirae has been present in 17 countries. We are present across different markets. So we believe that can we leverage on the expertise of maybe my Hong Kong office or my US office or my UK office to do that. So there are two approaches, like Kalpen rightly said. If you have the right managers in India to look at global stocks, why not? But if you have global managers sitting in that country doing the research, you can do it that way. It depends on how you want to structure your product. In our case, we created a feeder structured product so that it feeds into our existing products and into maybe some ETFs, which are low-cost solutions for you to be able to get exposure on various markets dynamically at low cost. So all boils down to different strategies from different managers. As investors, you will be spoiled for choice. You will have to do your own research, your own judgment of what maybe excites you or what you believe can give you a good experience.
My question is to both of you. How are you viewing the growth of Bitcoin and modern portfolio with almost all the global players stepping into it? And also, tomorrow, let's say SAB allows you to do it, will your fund house be opening doors to the asset for Indian investors?
So I'm sure whatever the regulator does allow, all of us will try and do. There's no reason why we will not. I'll give you an example. In our product, we already have investments in some of the blockchain companies. So you can invest in companies which could have crypto exchanges as the underlying, but investing directly in crypto is not allowed as per regulations in India. And hence, none of us will want to invest in an underlying asset which is not recognized by the government of India. However, investing in companies which could use blockchain as a technology, including crypto exchange, is a normal part of business, which I'm sure all of us will do. And in fact, in our portfolios, there are few companies which are part of companies in this space of blockchain.
So half of the answer is same, that currently not allowed, so we've not thought about it. And because we've not thought about it right now, I don't want to speculate, because as of today, we don't have skills to understand or analyze. So it's outside. I don't look at things that I don't have any way to operationalize it. In fact, I say this in, with all humility, a lot of these questions are not relevant to a large extent, but it's outside syllabus for me, because not allowed, I don't understand, I can't invest, why waste time? From my lens, that's how I think about it.
Yeah, anybody else, any questions? So, one question from my side, and like, Vaibhav said, now there are going to be, suddenly already AMCs have, 1,000 odd funds, now there will be a lot more coming. So how do they, go about assessing it? Because then, I mean, of course, you guys have track record on the international side already. But like, if you can give some 4 or 5 checkpoints, what they should look into this product and then make the decision.
See, I think everything when you have a choice, while it's always empowering, but choice also freezes you because you don't know how to select. So there are more schemes than what an investor needs, and it is not easy. So either you first choose a good advisor. Many times, the questions that we hear are so basic that we realize that the investor will do justice to himself by actually finding a good advisor. So instead of searching for best performing fund on Google, ideally the answer to that is first, don't ask this question, ask for a good advisor. And then, see, I've spent almost 28 years in this business of not just analyzing fund managers, but also hiring fund managers and, analyzing their performance. And you realize that 60% of times, 70% of times, your judgment goes right. 25-30% of time, it does not go right. What looked very good in the last 10 years may not actually be the best in the next 10 years. So there is a reasonable amount of chance in this whole game. So it's not an easy answer I can give in such a short period of time. But the way I think of it, how do I invest my money? I invest my money in a fund manager who has a belief system and I like that belief system. I like a fund manager who says, I'm all in with you. My money and my family's money is also invested in this fund. It's an indication of my belief system. It's not just in English, but in action. Third, you look at his track record. I generally have this bias because I started my career in a bear market and lost 80% for other people. I didn't have my own money that time. I like fund managers who lose less money when markets fall, who may earn slightly less when they rise, but they definitely outperform in falling markets so that over a full cycle, they deliver better outcomes. Fourth, I look for managers who actually caution investors with appropriate balance and objective data, and who don't only use narratives and stories, who are not permanently one-sided in their opinions, who are very objective, who guide investors about the risk. I like fund managers who say that, maybe last 2 years were too good for me, better than what I had expected, and there could be periods of, slowdown at some point. But this all is an effort. To listen to such fund managers is an effort, because many times what they say is not very musical to the ears. And you may say that, he's not a great fund manager. So investing, I have realized, is very counterintuitive. The simplest hack is what you like, avoid that, and what you don't like, maybe choose for that.
Anything you'd like to add?
Maybe I would just want to add to what Kalpen mentioned. Essentially, investing is all about getting the right mix. So you have to figure out whether your goals and the manager who's investing your money, both of you are matching in the way you are investing. So whether the time frame of investing, the mind frame of investing is very, very important while investing. So all of us keep saying we want to invest for long term, but typically after a couple of months, our sort of belief in a certain fund or a style or something doesn't match. So first invest with a fund where you can give it time and invest in themes or in segments where you are comfortable to invest in. See, advantage you get in global markets is there are many themes globally, like you could say semiconductor, artificial intelligence, rare earth materials, blockchain technology. All these are not available to Indian investors in India. And if you want to get access to some of these investments, you have to invest globally. What you have to see is, does the manager have the skill to be able to choose and identify these businesses? And can he manage my money, my funds in a very honest manner? If that sort of matches and your time frame of investing sort of matches, then I think so, and the risk profile, of course, then I think so you can look at investing, but just give, when it comes to investing, time. Because global investing, like Indian investing, requires at least 3-4 years to be given to give you decent returns.
So just because I have both of you guys here, so Kalpen, can I ask you about how you invest your own money, how much percentage in equity, debt, global stocks, etc.
So we have this simple rule that if we preach to all of you that you should invest in funds of DSP, we invest our money in our own funds. So that's my first disclaimer, that everything is through funds only. A small percentage would be in stocks bought in the past or sovereign gold bonds. So let's assume if everything is mutual funds, around, as of today, 35% is in Indian stocks, around 20% is in global, 25%. Around 25% is in bonds, and I think 10 to 15% is in sovereign gold bonds and gold. So it's a very diffused, diversified, some people call it confused portfolio, because I don't have a very strong view on any one single asset class right now, because everything has run up. Money making has become very easy. Stock market investors or paper investors are making more money than real business founders. People who are running the business are finding it tough to grow profits at 12%. This year profit growth is single digit, but we who are buying their companies are making 20-30% easily. So I'm slightly broad-based right now and diversified.
Vaibhav.
Yeah, I just want to maybe add to Kalpen is essentially when you make your investments, you should not be a return chaser. We keep saying, all of us as asset manager, don't be a return chaser. What I believe is to minimize risk of investing. So maybe I've been investing for 20 years. I wouldn't have redeemed a single sum of money in 20 years that I have invested, because finally, if you redeem money, where will you invest? So first goal of investing is to give it long periods of time to invest and not take out any money. And because I said I want to be a good risk manager, I don't over allocate to anything. Maybe like Kalpen said, we run slightly more diversified portfolios than maybe all of you, because we feel it doesn't make sense to be very aggressive on one asset class. So I would have maybe 50-60% of my portfolios as equities, within which international equities will not be more than 10%. I still believe India is a great growth story. Of course, international investing gives you the advantage of currency depreciation and themes not in India. But access is sort of limited. So that's why 10-15% there, and about 10%, 10-15% gold, and not more than 10-15% in debt. Somehow I'm not very large debt investor. I prefer to invest more in growth assets because I don't want to redeem at the moment. So I try to keep less in fixed income investments.
Okay. So no more questions?
No, I keep rebalancing my portfolio. ऐसा नहीं है कि we don't rebalance. But the idea is, if I suppose move out of say one fund, I would definitely invest in something else. So I wouldn't take the money back from something. And suppose my equity has gone from 60 to maybe 75% because of the way markets has gone up. I bring it back to 60 to get it in line with my asset allocation. So I'm not saying redeem and take the money back. Just rebalance it and reallocate within the existing set of funds that you want to invest. And idea is to invest for long periods.
Right.
I have a
okay,
question.
You have a question.
Yeah, so just wanted your perspective since you're experts in GIFT City. The intent of setting up GIFT City was to make it a rival financial hub to Singapore and Dubai, etc. So right now, LRS allows us to invest about 250K USD every year. So if you set up a family office structure in GIFT, are there any concessions to that? Can you invest more than that? And in terms of taxation, does GIFT City give you something which stops people from, say, moving their money to Dubai and other locations?
Yeah, so maybe I can add and then Kalpen can add. See, the idea of GIFT City was to ensure that some of the large families who have created family offices in Dubai and Singapore don't create family offices in Dubai and Singapore, but invest this money from India. However, there is some discussions going on between the regulators, and hence FIF or family investment funds have not taken up in a large way. However, large families can use a route called as an OPI route, which is overseas portfolio investments, and route their corporate money or their family offices money and invest through GIFT City into global markets. So under the OPI guidelines, you can invest up to 50% of your net worth as per the last audited balance sheet and invest into global markets. So a lot of flexibility has been given to companies, family offices and corporates to use OPI route to access global markets and transfer money. I'm sure family investment funds will also be set up in GIFT City in due times once the regulators sort of decide the overall regulatory framework.
So if there are no more questions, thank you, Kalpen and Vaibhav, for joining us and sharing all those insights.
Thank you. Thank you, everybody.
Thank you, everyone.